Hello, traders, and welcome to yet another week. Last week was quite amazing. We had some quite a lot of fundamentals that really affected the dollar index, from the US CPI, the US PPI data, the unemployment claims, the core retail sales, and the retail sales data, and then we had the prelim UOM inflation expectations and a prelim UOM consumer sentiments. So what we will be looking at this particular week is we are looking at in terms of the USD data. We don't have much that we are looking at, but today it's quite a free day in terms of fundamentals. There is no much high impact news. So Tuesday, tomorrow, we don't have any USD data. Remember, I'm focusing on the USD data because of gold. On Wednesday, that's when we'll have the FOMC meeting minutes, and these are the minutes of the previous meeting, basically trying to get very key details in terms of what the decisions, why the Fed maintained the decision to maintain the rates unchanged. Okay. So then on Thursday, that's when we'll be having unemployment claims and also the USD PMIs, both manufacturing and service flash PMI. And then on Friday, we'll be having Fed Chair Powell will be speaking on Friday. And I think you'll be speaking from the Jackson Hole Symposium. So again, I know it might shed some light in terms of what we're expecting for the dollar index, right? In terms of what we're expecting for the dollar index, okay, or for the USD. So that's what is on the lookout. So looking at what we have this particular week, last week was quite a good week. We had some quite good setups last week. So this was the setup that we were looking forward actually to on Friday, all right? But the market did not reach here. But you can see today the market opened and rallied up, and we can see this setup has already been activated, which is actually moving well, right? Which is actually moving well, and we are looking at yeah, almost hitting the TP. However, I couldn't have taken this setup because it's outside the New York kill zone. I mean, it's outside the kill zone. So remember, the Asian kill zone begins from 8 p.m. All right, it begins from 8 p.m. New York time, all the way to midnight New York time. And you can see when the price came here, it was 30 minutes past midnight. So meaning it's yes, all other conditions have been met, but it's not within the kill zone. All right. So let's see what we have this particular week. It's a new week. We begin by looking at the weekly time frame. And from the weekly time frame, you can see we are still trading within this bullish peanut, right? The price is still trading within this bullish peanut. So last week was bearish, created a bearish engulfing. So we are anticipating maybe probably the price to retest the bearish engulfing, and then we might see the price maybe push a little down on the downside, or maybe probably we might be able to see maybe the price continue pushing higher because um, anything is possible, you know what I mean, right? So when you look at it from the daily time frame, what we are seeing here from the daily time frame is like we had said, the price had respected this high probability order block, which is also bearish engulfing from the daily time frame, and then we saw the price push on the downside. Last week we saw the price on Friday closing as a bearish pin bar, right? So today we have seen the price push up all the way to this particular level, whereby we are seeing a price retraced from that level. That is the setup that we were looking at, right? And as it looks here, we see still the price hasn't changed. So we are anticipating maybe probably some bearish sentiment again, all right? So for today, I'm looking at some kind of bearish sentiment. But remember, if today's week gonna be bearish, what will happen is that the price will open, then we will see the manipulation, all right? Then after the manipulation, we'll see the distribution, and then the week will end like that, okay? So remember the power of three, okay? So that's what I am looking at, okay? But you know, with gold, you can be able to look at it even in different time frames because yeah, anything is possible in all these parameters. Okay, so looking at this particular setup again, you see with this OB on the 15 minutes time frame, also the price came and tested. So let me delete this OB because yes, it has been tested, but remember, it hasn't met one of our conditions that is within the kill zone. It should be activated within the kill zone. So if you look at this one, this is also an OB from the 4-hour time frame, which has been activated, all right? But also not within the kill zone, so we couldn't have taken that kind of a setup. So when you look at these are some of the chart patterns that I usually say they are high probability chart patterns. If you combine with the smart money concepts, they usually give us quite some bias in terms of what the price is likely to do. Okay, so I said when we have this kind of a downtrend, then we see price consolidating in an ascending channel, then higher chances is that we are waiting for the breakout on the downside. Okay, so also from this particular time frame, we might see the price continue pushing on the downside. From the 1-hour time frame, when we come to the 1-hour time frame, now we start looking at it in different ways. Number one, we have a BOS there, all right? We have that is BOS, or we can call it a change of character. Then that means that we will be looking at the price coming here for us to look for some bullish sentiment or some buys, okay? So then this particular order block, we can have it minimized to that particular point. And then now we go to the 30 minutes. Our work is to reduce the risk as much as we can. So from the 30 minutes, that's the level that we are talking about. And on this other one, still, this is the level that we will be looking at, okay? Because this is the last buy candlestick actually there, all right? That's the level we'll be looking at in terms of buying. And now we can go to the 15 minutes time frame. So from the 15 minutes time frame, we can have our zone at that level. And also remember, we still have another zone here that was it was activated by this particular week, right? I think was during the Asian kill zone, so we can see that it was activated. So I will be looking at an instance whereby the price comes to this level, and then maybe probably we might see some selling opportunities. But this level is about 70 pips. So the best thing we can do is to minimize the risk there. So we go to the 5 minutes time frame. Remember our trading rules. So from the 5 minutes time frame, we can have it around that particular point. Okay, so we can have it there. And then now these are the ones still, yeah, it fits well. Yeah, it's still, we can use that one. All right, we can use it like that. But now because maybe the risk might be slightly higher, what we will do is we will wait for the price to dig deeper into the zone, right? Maybe probably to the mean threshold, right? So to the mean threshold, then we have something like that. So this should be 50 pips. 50 pips stop loss. So from our entry, our take profit should be 37.099 and our stop loss should be 22.099, right? So that's the kind of setup that we'll be looking at, 100 pips. Risk to reward ratio 1:2, right? Risk to reward ratio is 1:2. Okay, so we will be looking that for some buys. And now when the price comes to this particular level, we'll be looking for some selling opportunities. All right. Let's have it that way. So our enterprise is that. So our TP should be 61.211. Our stop loss should be 76.211. Okay, so that kind of a setup as well, risk to reward ratio 1:2. So that's what I will be looking forward to. Remember again, it's on a Monday morning. Not even a Monday morning, it's on a Monday. And most probably on Mondays, what we have is some kind of manipulations, low volatility. Remember the power of three. When the price opens, it does the power of three mostly on Mondays, and that's where we talk about accumulation and manipulation. And then now from Tuesday, Wednesday, Thursday, we have the distribution, okay, and sometimes even on Fridays. So today it's a go slow day. We just monitor what the price is going to do. But in case the price comes to these levels, we can execute the trade, but with minimum risk. Remember, when we trade on Mondays, it's best to trade on minimum risk. And then now on Tuesday, that is starting tomorrow now, the price will have already given us a clue in terms of what we're expecting it to do. And then now we will be in a position to know the buyers. Okay. But I'm still looking at a bearish week this week. Okay. I'm still looking at a bearish week this particular new week, because if you check from the weekly time frame, um, we had a very bearish engulfing, and I'm looking at a scenario whereby the price might come to retest this bearish engulfing, right? Where the price might come to retest this bearish engulfing, and maybe probably come all the way to this trend line here, the upper trend line, before maybe pushing higher. That is my bias, but again, remember, bias doesn't mean that I'm always right. But from reading what I can see from the price action, that is the direction I'm seeing. Maybe probably we might take this particular week. Remember, apart from what is recorded in the Forex Factory calendar for the dollar, we might have other maybe probably news upcoming. So, anything can happen that we see gold react to. So it's always good when you're taking these positions, make sure that you're not risking more than 2% of your account, because risk management is what is going to save you at the end of the day. It's not about the strategy, but it's all about how you manage risk, your psychology on your trading, etc, etc. So with that, ladies and gentlemen, um, I wish you a very blessed week. And remember to stay focused, remember to stay disciplined, and also to trade with purpose.